Trade finance is the backbone of the global economy, and TradeTech is on a mission to turn it into a liquid asset class. A bold statement? Let me explain. Let's take an example of a supply chain, from a plastic granule producer to a keyboard producer, laptop producer, all the way to the reseller. As you can see, there is always time which gets kind of wasted in the production, inventory, and transport. And that, of course, will lead to also delayed payments. Banks are filling this gap. They are prepaying at a discount to suppliers, and then the buyers will eventually pay the invoice at the due date. Banks are doing this currently in very large size. So there's 7.6 trillion of global trade finance done per annum. It's of course not just invoice financing, there are other forms of trade finance as well. But banks need to distribute that risk to some degree. They distribute it to other banks. They also distribute it to credit insurers, and to a very limited degree to capital market participants. Those latter ones, they need quite expensive repackaging and portfolio risk information, such that it becomes digestible for these capital market participants. Those processes are very expensive, and very often it leaves the capital market investor with absolutely no extra spread just because the costs are too high. Now, if banks can't distribute, then our plastic granulate producer, in our example, will not potentially not be fully served. And the Asian Development Bank is estimated currently that there is a 1.5 trillion gap for trade finance. Other estimates are going well beyond this. Our mission is to reduce these friction costs through cutting-edge trading automation technology, such that all participants are in a position to get what they want. Corporates, better access to financing costs. Banks are able now to increase their net interest income, and capital market access capital market participants can get access to an asset class. We support all trading channels for banks, and we already operate them, whether they want to distribute to other banks, credit insurers, or capital market participants. We are building a trading infrastructure, and to a degree, we have already laid the groundwork for this, with many of the world's leading participants already active using it. It's a little bit like a telephone system where you wouldn't want to put wires into place between every two parties. Banks need to plug into limit system and back office systems, so do investors, and the central marketplace essentially allows this to become an attractive and also efficient many-to-many marketplace. We manage the whole trade lifecycle, management from pre-trade, trade execution, all the way to post-trade. And our ecosystem now involves some of the largest trade finance banks, asset managers, but also credit risk insurers. We have more than 45 members which joined the Trade Finance Distribution Initiative, which we are jointly operate with the International Trade and Forwarding Association, and where many of them are already in full production with TradeTech. As such, you can see us as a kind of a low-end disruptive innovation where we make processes more efficient. But at the same time, we are enabling a 0-to-1 strategy through a new market disruptive innovation, where we are cutting the cost to such a degree that suddenly trade finance becomes a liquid asset class.
Welcome back, guys. Hope you're all having a great day. Once again, I'm back with some more crypto news / information, keeping you up to date with what's going on in the space. We have an XDC partner which has joined the World Economic Forum. Now, this is big, guys. TradeTechs. TradeTechs are TradeTechs aim to bring automation and new innovative technologies to the trade finance sector. TradeX bridges the technology gap in the $15 trillion trade finance market, 1.5 billion process volume, 30,000 plus invoices financed, 5,000 plus corporates funded. Workflow automation, repackaging, credit scoring is what they initially do. Back last year, 27th of September, Synfin and TradeTech launched the world's first trade finance-based NFT transaction. TradeTech has partnered with Singapore-based exchange Synfin to offer tokenized trade finance products to institutional investors and has completed its first transaction. This is the first complete end-to-end transaction following a unique set of regulatory guidelines and trade finance standards. The offering utilizes XDC networks, enterprise-grade blockchain technology to transform trade finance assets, which are repackaged and distributed by TradeTech into non-fungible tokens. Institutional investors can buy and sell these tokens, which represent the value of an off-chain asset. This gives token holders legal entitlement to an asset or package of assets. So for those of you that don't know the ties between TradeTech and XDC, I just gave you a brief outline of what they are planning to do. And this is big, guys. Yeah. So make sure to keep your eyes peeled on this one. Some more XDC news that has come out. This is another company which has ties to XDC. Is SDOCS. Paperless trade solutions provider SDOCS has been acquired by Intercontinental Exchange ICE. Now, for those of you that don't know who ICE are, they own the Nasdaq. So these are the big boys here, guys. This is courtesy of Billion D, Darren Lewis Jr. on Twitter. Want to check him out? Give him a like and a follow. TradeFinex network creates a standard bridge from platforms like Bolero, SDOCS, and Trade Trust, subsequently allowing such platforms to participate in secondary markets. This is possible since TradeFinex is fully regulated by the ADGM and licensed to take custody, settle, and finance finance assets like tokenized bill of lading in secondary markets. Now you can see here, TradeFinex is powered by XDC Protocol. Yeah, so there you have a connection with SDOCS, which will ultimately have a connection with ICE and, you know, the big boys in the game. So this is looking promising for XDC at the moment. This is something that I am going to be taking more of a nosedive into to see what more connections I can find. But this is big, guys. This is really big. Just to give you a little brief overview of what SDOCS will be trying to achieve is paperless trade solutions. So when you have trade finance, there's always a paper trail, and sometimes paper trails, they get lost. I mean, there could be thousands of paper documents to go for this one sort of trade. Say if the trade's going from the UK to like the US or something, all the stops and checks and everything, it has a paper trail. Now, SDOCS will be looking to, you know, cut that out and, you know, make it all automated and more streamlined, which will save a lot of money for companies. So this all falls all in line with trade finance. Next up, we've got some more XDC news. On the Marshall forms a strategic partnership with Plugin to create a unified platform syncing real world data on XDC. Not going to go too much into this. I'll just read out one paragraph. As interoperability will have an imperative importance in the year 2022 The Go plugin platform enables Web 3.0 projects with a turnkey solution for fetching trusted, validated, secure, lightning-fast data from the real world. The Go plugin API allows smart contracts to have off-chain computation with data indexing and aggregation. Now, as I've been saying, keywords, interoperability, Web 3.0, these are going to be the driving forces going forward, guys. I mean, yeah, these ISO 222 tokens are going to be the regulated tokens, guys. Yeah, I mean, when regulations get involved, these ones are going to be rising from the ashes, as you could say. Yeah, because they will be already regulated and they are compliant ISO 222. So XDC, XLM, XRP, IOTA, Algorand, they're the ones at the moment to me to be the chosen ones. So as we go forward, I'm going to be keeping you guys up to date with these. But I've put this in my Patreon group for those who want to check it out. I'm going to do a bit more reading into that one. And last up, I've just come across this. President Biden announces former Ripple advisor as a pick for the Fed chair for supervision. Following the withdrawal of the former Federal Reserve Board Governor Sarah Bloom Raskin, United States President Joe Biden has announced his intention to nominate former Obama administration official and law professor Michael Barr as the central bank's vice chair for supervision. In a Friday announcement, the White House said Barr was Biden's pick to supervise the Federal Reserve and set the regulatory agenda for its leadership. Barr was on the advisory board of Ripple's Labs from 2015 to 2017, served as the Treasury Department's Assistant Secretary for Financial Institutions under former President Barack Obama, and taught courses on financial regulations at the University of Michigan. According to the White House, he was a key architect of the Dodd-Frank Act, legislation that continues to influence financial policy in the United States. So that does look interesting, guys. That does look really interesting. We do have a ex-board member of Ripple now going to be the Fed vice chair for supervision. I mean, I don't know what to say, guys. The writing's on the wall for me, you know. The writing's on the wall. So I'm just going to leave that with you. Hope you have a great weekend, whatever you do, whatever part of the world you're in. And I'll speak to you guys soon.